Welcome, ladies and gentlemen, to Commodity TV and a new episode of our online interview series. We want to get an update from Sibanye-Stillwater today, and James Wellsted is with us. Good morning to South Africa. How are you?
Morning, Jochen, and morning to your viewers.
Yeah, thanks for taking the time, James. I'm a shareholder of the company and also a happy shareholder because you pay twice a year, you pay a dividend, and I love that, honestly. Of course, your share price was hit as everybody else's share prices, that's for sure, despite some very positive developments you had in your company. We want to go into that in more detail in a minute, but first of all, I wanted to ask you, how was the first 6 months this year, as June is next week ending? How were they? Have you had a chance to solve some problems you had with one of the shafts, for example? So please elaborate a bit on that.
Yeah, listen, I mean, operationally, we've had a bit of a mixed period, some positives, but then some challenges as well. As you mentioned, on the challenge side, we had an incident at our US PGM operations at the Stillwater mine, where we had a shaft incident where there was an overrun of one of the hoists, which damaged the headgear and the winding mechanism of that hoist, of that shaft. So that meant that we weren't able to put people underground deeper than 50 level, which is where a lot of our mining activity takes place at Stillwater. So that delayed production, and it's delayed the continuation of the repositioning plan that we announced to the market last year. We lost about 30,000 ounces directly as a result of that incident, but there's also a knock-on impact, obviously, on the rest of the project. So we have guided down our production outlook for the period for the US PGM operations, and obviously unit costs are going to be higher due to lower production as well. Other challenges we faced but are managing quite well have been the load shedding, or as we experience in the mining industry in South Africa, is load curtailment. So the difference being load shedding is what the public experiences. I experience in my home, where we essentially have no power for various periods over a day, maybe once or twice a day even. Whereas at the mines, we don't get power cut to us. What happens is we are requested by the state utility to reduce demand by a certain amount during periods when they've got very low power reserves. So we've been able to manage it quite well so far. It does result in higher costs because we are running diesel generators at our gold operations, and there has been a bit of a production impact at our PGM operations, but it hasn't yet been as severe as the forecast that we put out in our first end of year results in February, where we said if we saw continued load shedding at the level that we had seen in the beginning of the year, it could potentially impact supply by about 15% from South Africa for the year. So that is a bit of bright or positive information, is it doesn't look like the supply impact is going to be as bad. But again, we are still in winter, and that's a high demand period. So we need to get through winter first. But certainly there do seem to be some positive, the outlook seems a little bit more positive from a power generation side. Obviously this will be assisted to some extent by private renewable energy projects which are being developed, one of which we announced a week ago, which was an 89 megawatt wind project that we will be developing. And that's going to obviously alleviate the pressure on the state utility Eskom quite a lot, and make it a lot easier for all of South Africa going forward. So those have been the positives. The other positive has been, first of all, our PGM operations are still running very well. We've managed to maintain our costs relatively well in this inflationary environment, and production has been largely unaffected by the load shedding. And then our gold operations have staged quite a strong recovery from last year, which you remember we had a 3-month strike at our gold operations in the first half of last year. So this year, what you'll see is a more normal production levels, and obviously a return to profitability at this kind of gold price that we've been experiencing. And last year we reported a more than 4 billion rand adjusted EBITDA loss, and that will now swing into a positive. So that will offset to a certain extent, the reduction in commodity prices, including PGM prices we've seen this year.
Fantastic. You said already about that wind farm you are also building and investing. Would be solar a possibility for you, or would that require just a super large solar plant, which would make no sense in South Africa?
No, we are developing substantial amounts of new renewable energy projects. We've got over 550 megawatts of renewable energy projects that are currently in or early development and being developed. So the first one to be announced that has reached conclusion effectively, or we've reached a commercial agreement, was the Castle Wind Farm. That will be generating 89 megawatts from a remote area in another province, and then will be wheeled. We call it wheeling, where we'll use the national electricity grid to then take that electricity from the wind farm, and we'll then take it off where we need it at our operations. But we do have 4 solar projects that are currently being developed as well, or in the process of being concluded. One at our gold operations, 50 megawatts, and then 170 megawatts, 3 different solar plants at our PGM operations. And then there are further wind farms which make up the difference. So by 2025, most of them should be operational and commercially at commercial levels. And that will reduce our carbon scope 2 emissions by about 25%, and also reduce our demand for electricity from the state utility by about 25%.
Okay, super, and bring costs significantly down. That is fantastic. Let's come to something what I really like, because you are heavily diversifying out of the precious metal sector, I would say, into the renewable battery e-mobility sector. And we saw on 11th May you had the foundation of the stone, the foundation stone laying at the Keliber mine. So how is the construction going, and will Calibre be really next year already in full commercial production?
No, it won't be that soon, unfortunately. Yes, so we have laid the ceremonial foundation stone laying at Keliber. Our CEO and various other dignitaries were present there. But the project started earlier this year. They're already doing the civil work, etc. There are a number of phases of the project. This is actually the refinery, which is located in Kokkola in Finland, and that's got about a 2.5-year lead time. So probably mid 2025 when it will be commissioned. We've then got a concentrator that needs to be built, and then the open pit mines that are currently will be developed, but those have got much shorter lead times and are much less capital intensive. We have got permitting for all of those different phases, but we are in a court process where we are seeking clarity on some of the conditions that were applied for our concentrator and one of the mines that we applied for permitting and we got last year. So, for instance, some of the requirements are quite stringent, where water that discharged from the concentrator has got to be of a better quality than the drinking water requirements in that area, which for us obviously don't make sense, that you need to release water that's better than drinking quality into the rivers, which are obviously lower quality than the drinking water. So those, we're waiting for clarity on that, but in the meantime, that refinery will continue to be built. Obviously, this is an extension in terms of green metals of our PGM business, because as you know, PGMs are used in auto catalysts, in the exhausts of cars, internal combustion engine vehicles, to remove harmful gases from those exhaust gases that are emitted by those vehicles. So they are already green materials or green metals. And going forward, platinum, iridium, ruthenium are going to play a very, very important role in the hydrogen economy. in electrolyzers, where you convert water into hydrogen and oxygen through various technologies, and then also in fuel cells, where then the energy stored as hydrogen will be converted into energy using platinum-based fuel cells. So the PGMs are going to play a very critical role there as well. But definitely battery metals is something we're focusing on. And we've also got another battery metal project in the US, as well as the Sandouville nickel plant in France, which we will also be developing recycling and battery metal processing at.
Yeah, exactly. I just wanted to talk about Rhyolite Rich in the US because you guys, have received the conditional commitment for a loan of up to 700 million US dollars from the, let's call it from the state or from the government. I think it's part of the IRA, right?
This one is not exactly part of the IRA, but it is associated with the Inflation Reduction Act, which obviously, amongst other things, requires a certain amount of locally produced or from trade partners metal to be utilized in batteries that are produced in those countries. Now, obviously, there are a lot of gigafactories. Tesla, various other auto manufacturers are building gigafactories on the southeastern seaboard of the US, and we think that Rhyolite Ridge, like Keliber, Keliber being in Finland, is a very green metal will be produced because Finland is mainly hydropower and nuclear power, so very green energy, and very close to Germany, Poland, etc., where so the shipping doesn't incur additional logistical costs, and you don't add a significant amount of carbon footprint by transporting it from, say, Argentina, Australia, or Chile, where most of the lithium is produced. So we have positioned our operations close to the European ecosystem and to the US ecosystem. We expected there to be more nationalized focus of regulations, and that's coming through the EU Green Deal and the IRA in the US. So Rhyolite Ridge is located in Nevada. We are currently busy with a drilling program and reviewing the pre-feasibility study. We did encounter a unique grass species in one part of the resource, and that's been declared a protected species. So we are planning the pits around that area until we can propagate that grass successfully. But we expect that pre-feasibility to be done by the end of this year, and then hopefully get the go-ahead on the project. As you say, 700 million debt funding has already been essentially secured through the Department of Energy in the US on very, very favorable terms. And then we will put in the remaining equity funding to acquire a 50% interest in that project. But that's very, very exciting again. 22,000 tons of lithium hydroxide, boric acid as a byproduct, which will mean that the costs are going to be amongst the lowest in the industry, and also very, very close to all of those gigafactories. So very little other carbon footprint or other costs.
So it's the perfect setup.
Well,
Super.
we think so. So and we think it'll be timed very well coming into production by about 2026 to deliver into what we see are going to be quite significant deficits in all of the battery metals. That's lithium, nickel, copper, cobalt.
You said you will provide then the rest of the equity portion to acquire then the 50% in the joint venture. How much money we are talking about approximately?
So we initially indicated about 490 million, which was about half of the capital required. But that was obviously on the previous feasibility study, which we're now having to redo to, as I said, mine around the buckwheat, the Thames buckwheat area. So, and with obviously inflation and delays in that project startup, it'll probably be a little bit higher. So I would estimate between $600 and $700 million.
Okay.
But that will effectively mean the project is fully funded.
Okay, super. Yeah, that brings me to the next question. You bought New Century, and then we saw that you had to provide a $30 million emergency. Yeah, how can I say that, facility? And also we saw that you have refinanced your dollar revolving credit facility on around $1 billion. You can bring that up maybe to 1.2 billion. So first question is, why this 30 million for New Century? Because I had the impression last year when I interviewed the company, it's a good 15 months ago, that they are really fine and they are doing a really interesting and great job. So I was really happy when you bought the company, because I think they are doing the right stuff. So what happened there? And secondly, what you're going to do with the billion?
Yeah. So on the New Century, I mean, New Century, just for a bit of background, is a tailings. So it's an old dump, mine dump reprocessing business, currently extracting zinc from the old Century Resources, which is a mine in Queensland, a zinc mine, from tailings. And then obviously at the same time rehabilitating. So it does, you're basically taking old mine dumps and reprocessing, extracting value, and then redepositing them in an environmentally friendly manner and more modern facilities. It's similar to our business that or investment in DRD Gold, which is the largest gold tailings reprocessing business in the world. And it's part of our bigger circular economy focus and strategy. So we intend to grow our recycling business. We're already one of the biggest recyclers of PGMs in auto catalysts in the world. We intend to grow that business as well as growing into battery metal recycling, and then also becoming a leading global dump reprocessing business as well, building a leading dump reprocessing business. So that's the broader strategy. New Century obviously complements our DRD Gold investment, located in Australia, which is a new region for us. The reason for the 30 million loan was because they experienced severe weather in Queensland. So obviously with climate change, everybody's experiencing severe weather. We had floods in Montana a year ago, which affected the whole region and washed away all of the access roads to our mines. And again, severe flooding affected the mining industry in Queensland, flooding the pits, etc. And as a result, we had to supply that facility to assist them and get them through that period. The loan you're talking about, or the debt, is our revolving credit facility. So we previously had a $600 million revolving credit facility. And because of the diversification of the company and growth of the company, we've been able to, it's a positive signal that lenders are willing to support an increase in that facility up to 1.2 billion. The initial is 1 billion, and then we've got the option to increase it to 1.2 billion. And we received much more favorable terms than we had before. So we do have substantial capacity on our balance sheet. We're currently in a net cash position still. So we do have quite a lot of capacity to lever up our balance sheet for various purposes. Obviously, we are looking for M&A opportunities. Most of our capital that we can foresee for our current projects is funded. But we are on the lookout for opportunities should they make sense from a value perspective. It is difficult in this market, though, because, obviously battery metal prices have remained quite elevated. There's a lot of M&A going on in the battery metal sector. So valuations are a bit difficult for us to see value in at the current levels. But, we'll wait and see. We'll continue to develop our existing projects in the meantime. And where the opportunity comes up, we'll make a move.
Okay, super. So we were talking a lot about green energy metals. I asked you that several times in the last 2 years, but now the uranium price is moving towards the $60 because you still have in your tailings, I think, 80 million pounds of uranium reserve, which is on the surface. Yeah. Could you use a New Century to bring that to life, to lift the uranium treasure?
That it's more likely to be DRD Gold, I would think, because DRD Gold is already reprocessing our gold tailings dumps in that exact same area. We in 2014 we had a project called the West Rand Tailings Retreatment Project, where we were looking at a regional surface processing solution, which included the Cook dump, which has got the uranium in it, very high grade uranium, and then all of the other dumps, which are mainly gold, but then have got trace levels of uranium. So yes, I mean that is a possibility in future. Certainly, DRD Gold has been doing extremely well. They've been implementing a growth in that region, and yes, I mean it is a possibility that that may occur in future. But we would obviously have to negotiate terms with DRD Gold.
Okay, super. Yeah, so things look quite good, I would say. When will you bring out your half-year results approximately, time-wise?
So they will be published on the 28th of August, as per normal, and we'll have a presentation, and we'll put the details of that on our website fairly shortly.
Super, perfect. James, thank you very much for your time. Wish you all the best. Have a in your terms now. Have a still a great winter. We enjoy your great summer, and I would say we talk then after the 28th of August when you have your half year numbers out. Yeah. Okay. Super. Thank you very much. All the best.
Thank you, Jochen.
Yeah, thank you. Yeah, ladies and gentlemen, there was James.
Bye bye.
Well, thank you. There was James Wellsted from Sibanye-Stillwater, and you heard it. Things are going much better this year than it was, like last year with the strikes faced, etc. And also they have repaired the shaft in the mine, which had a bad incident. But what we really like is the further diversification and investment into the green energy metals. Two big lithium projects, both will be up and running 2025, 2026, which is the perfect time where the world needs a lot more lithium than today, because e-mobility is still going its way and its growth path. And also the financial flexibility with the new revolver is fantastic. And I think the company is poised for much more growth, much more how can I say that, diversification into the new energy metals, and also geographically they are moving out of Africa, which I think is a nice way to do so, to really mitigate risks here. And you should really have a look at this stock, because the share price, to my opinion, is way too low. So that's a great buying opportunity. Don't forget to pay half yearly a dividend. And I have a very good feeling, as James alluded to, now the EBITDA loss of last year will turn into a profit. So I have a good feeling that probably dividends will also raise this year and next year. So thanks for watching us, and bye bye from Switzerland.